Hey everyone, welcome back to Chainlink Explained Daily. If you've been following the crypto markets, you know things are heating up again. And today, we're diving into one of the most important projects connecting traditional finance with blockchain, Chainlink. From fresh partnerships with major institutions like SBI Digital Markets, UBS, and S&P Global, to renewed investor confidence amid broader market recovery, Chainlink is quietly setting the stage for something big. So grab your coffee, sit tight, and let's unpack the latest updates, price action, and future outlook for Link. Because this could be the next setup before the next major crypto wave. Let's start with the numbers. At the time of recording, Chainlink, ticker symbol LINK, is trading around $14.99, up about 1% in the past 24 hours. The trading volume is strong at $1.28 billion, and its total market cap stands near $10.3 billion, giving it a market dominance of around 0.3%. Now, over the past month, Link has dropped roughly 32%, but interestingly, indicators suggest a possible trend reversal. The Relative Strength Index, RSI, is hovering around 38. That's a sign of growing buying pressure after being in oversold territory. Meanwhile, the MACD indicator recently crossed above its signal line, something traders often view as an early bullish signal. If Link manages to maintain support above 14, analysts expect a potential retest of $17, and if momentum follows through, the next stop could easily be the $20 mark, a solid 30 to 35% potential upside. To understand why Chainlink still matters, let's rewind a bit. Chainlink launched in 2017 with an ICO price of just 11 cents per token. Fast forward to May 2021, and Link hit its all-time high of $52.89. That's an astonishing 480x return for early investors. Since then, it's had its fair share of market cycles. The price bottomed near $5, but even during tough times, Chainlink kept building, expanding its partnerships, developing its Oracle technology, and launching new protocols like CCIP, which is now driving its comeback story. Over the past 9 years, Chainlink has averaged 177% yearly growth, with its strongest performances historically in Q2. So while short-term volatility exists, the long-term trend still points toward growth and adoption. Here's where things get exciting. Japan's SBI Digital Markets, part of the massive SBI Group, has officially partnered with Chainlink to integrate its cross-chain interoperability protocol, or CCIP. This protocol is designed to make it easier and safer for financial institutions to move digital assets across multiple blockchains and regulated systems. In simple terms, it's like creating a secure bridge between traditional finance and decentralized finance, what we call TradFi meets DeFi. And it doesn't stop there. UBS, one of the world's largest banks, also completed its first-ever live blockchain transaction using Chainlink's technology. The transaction tokenized a fund known as UMint in collaboration with DigiFT, a licensed on-chain fund platform. This milestone shows how Chainlink's infrastructure isn't just for crypto-native projects, it's becoming a core piece of the institutional blockchain puzzle. Chainlink's influence continues to grow globally. Recently, the network partnered with S&P Global to bring stablecoin stability assessments, or SSAs, directly on-chain. That means blockchains can now access verified, real-world financial data from one of the biggest rating agencies in the world. In addition, Chainlink's partnerships and compliance programs have expanded across multiple regions, including Japan, Bermuda, and several parts of Europe, building trust with both regulators and institutions. To top it off, Stellar, a well-known blockchain payment platform, has teamed up with Chainlink to enhance DeFi growth and real-world asset innovation on its network. Together, these developments show that Chainlink isn't just another Oracle provider. It's fast becoming the trusted backbone for global finance entering the blockchain era. Now, let's look at on-chain data and sentiment. Despite the recent pullback, Chainlink's long-term holders are largely unmoved, meaning most investors are holding their tokens, not selling them off. This type of accumulation phase often hints at confidence in future growth. Meanwhile, the Fear and Greed Index currently sits at 24, indicating extreme fear. Historically, these levels have often preceded recovery phases in crypto markets, when smart investors accumulate while everyone else is cautious. In terms of network usage, Chainlink continues to dominate multiple sectors. In DeFi coins, number one in yield farming, in AI crypto, number one in Solana-based tokens, and still a top project across Ethereum and Tron ecosystems. That kind of cross-chain presence is rare, and it's part of what gives Chainlink its staying power. So where does Chainlink go from here? If the price can sustain momentum and break through $17, the next resistance zone sits between $19 to $20. Beyond that, traders will be watching for confirmation of a mid-term bullish trend. Technically, both the RSI and MACD show early recovery signs, but for a true rally, Link will need to see rising volume and consistent daily closes above key moving averages. Fundamentally, Chainlink's ongoing partnerships, especially those with banks and financial platforms, could act as catalysts for its next big move. And with the broader crypto market recovering, Bitcoin trading above 103,000, Ethereum steady near 3,300, and XRP gaining traction after Ripple's roadmap announcement, the stage looks set for a possible Q4 recovery run. So what do you think? Will Chainlink's latest partnerships and steady recovery push it back into the top performer list, or is the market just teasing us before another cooldown? Drop your thoughts in the comments below. I love reading your insights. And hey, if you found this update helpful, don't forget to smash that like button, subscribe for more weekly crypto breakdowns, and hit the bell icon so you never miss a beat. This has been Crypto Pulse Daily, where data meets direction. Thanks for watching, stay sharp, stay curious, and as always, stay crypto ready. Would you like me to